You've probably already heard about the rule of 72. It states that you take the interest rate you're getting, divide it into 72, and that's how many years it takes for your money to double. So if you're getting 7%, it'll take about 10.2 years for your money to double. So where should you be investing your money right now? I decided to make this video because I had a client email me the other day, and he asked me, where is a good place to invest some money? Ironically, I had my investment licenses for 15 years and used to manage a $60 million book of business for my clients when I was a financial advisor. I got my investment licenses at the age of 19 years old, got my Series 6, 63, 7, and 66. With all that said, this of course is not intended to be financial advice, it's just infotainment. Information that's supposed to be entertaining.
You aren't entertaining, you're boring, dude.
No one asked you.
But I have an uncommon answer to this question. Well, some of it is what you expect, but I added my own twist to it. First, let me say that I've lost a lot of money over the years of making stupid investment decisions and not following my own advice that I gave my own clients. Why? Because I was always looking for that get-rich-quick investment. What's the silver bullet? So before we dive into the investments, there's two things that you need to know that will hurt you the most and would probably cause you to lose money. The first is chasing investments that seem too good to be true. Look, this is how Bernie Madoff conned people for so many years. 12% a year, like clockwork. People believed it. Don't be stupid. If it sounds too good to be true, it probably is. Now, the second one is to be patient. The best investments perform the best over time, not 3 months or 6 months or 1 year. You're talking 5, 10, 15 years. I remember being invested in Facebook and Amazon and all these different stocks and then trying to buy and sell them and chase big short-term returns. Without fail, it worked a whopping 0% of the time. So let's talk short-term first, right? If you have 1 year or less money, just keep it in a savings account. You should not be investing money that you plan to touch in a year or less. Why? Because if it goes down, it may take a year or multiple years to recover the losses. And that's if you recover at all. So right now, I'm putting my short-term money in CDs and high-yield savings accounts. As of the making of this video, there are places paying 5% in interest. I know my bank has a 2-month CD paying 4.5%, and I'm good with that. So then for money you have in an investment account, or if you're willing to move it to one, you can put it into a money market account. So Vanguard has one that's doing 5.4% as of the making of this video. And although technically money market accounts can fluctuate, the money market's objective is to provide a stable share price of $1. So basically, a money market account is intended to mirror a savings account, except it's just in an investment account. And so with the stock market at an all-time high, I actually have more money than I'd like to admit just sitting in money market accounts as the stock market has been soaring. So I've definitely missed out on some upside because of this. But this is why you don't try to time the market. Hey, so my team and I put together a list of 5 low-cost franchises that make $1 million or more. So if you want to see that list, then you can click the link below in the description, or you can go to franchiseempire.com/low cost and get access there. Let's get back to the episode. Okay, so for entrepreneurs out there, here's investment number 2, which is an unconventional one. It's to invest in people. As a business owner, your greatest form of leverage and growth is typically in building a team. And this is why business owners will barely pay themselves for years, because they're constantly reinvesting their earnings back into their business. So just imagine for a second that you have $50,000 sitting there in an account and you want to invest it. And you can go get 5% easy on that money. Great, that made you $2,500. But what if you took that same $50,000 and hired someone in your business? Assuming you hired the right role that gave you more leverage in your business, what could that ROI be? And the reality is, even if the employee costs you $50,000 a year in salary, you can still park the money at 5%, take what you need to pay out to them each month. And the point though is a shift really in mindset. There's a great book called Buy Back Your Time. And the idea is to continue to buy back your time in your business and your life to allow you to focus on higher leverage things that help you grow your business. Now, number 3, for money that I don't plan to touch for at least 3 years, I put it in either ETFs, which is exchange traded funds, or low cost mutual funds. Again, Vanguard is an easy place to do this. And quite honestly, if you're just totally financially illiterate, the easiest set it and forget it.
If you followed all the instructional material, you just set it and forget it.
is to just put the money in a target date fund. Basically, it's an investment that automatically adjusts its aggressiveness lower as you get older and closer to retirement. As an example, if I were planning on retiring in 30 years at about 66 years old, I'd be in a 2055 target date fund. And so when we look at that, that is invested about 90% in stocks. So pretty aggressive. But someone in a 2035 fund who planned to retire in 10 years would only have about 70% in stock, which makes the investment less aggressive. Number 4 is the Warren Buffett investment. So Warren Buffett's known to be the most successful investor of all time. And here's what Warren says. He says that the best investment by far is anything that develops yourself and it's not taxed at all. So the best investment you can make is in yourself. This could be courses, classes, programs, coaches, etc. Over the last 15 years, I've easily invested about $100,000 in online courses, seminars, business coaching, and just educating myself. Recently, I spent $5,000 for a one-day business workshop. Why? Well, my mindset was all I needed to learn was one thing that I could apply in my business that I could probably get a 10x ROI on the investment minimum. And that's the mindset of the most successful people that I personally know have. They make investments into these things. Plus, I got to write off the $5,000 seminar as a business expense as well. So that helped. But when I first started making YouTube videos, I bought a course for $300. I studied it. I took action on it and implemented it and have generated over $1.6 million in sales on YouTube as of the making of this video. So when I started this online business in 2021, I also hired a coach who had done something similar and was many steps ahead of me. I paid that coach $1,500 a month for over a year. I 100% grew the business faster and avoided mistakes and made money more quickly because of that coaching. Now, last but not least, maybe you knew it was coming, it's crypto. Now, I would not put any money in crypto that you plan to touch for at least 5 years. In 2021 and 2022, when crypto was going crazy, I put some money into it. I saw my $27,000 account go all the way down to $11,000. I was pretty miserable and depressed about that. Fortunately, I learned from so many other stupid times that I lost money and being impatient, and that what Warren Buffett says, when people are greedy, be fearful. And when people are fearful, be greedy. The only thing was, a lot of crypto was probably never going to recover. So what I did was I reallocated almost all of my 10 different cryptos that I was basically gambling on and guessing, and I put them into Bitcoin and Ethereum because I had a good idea. I thought, my belief was that Bitcoin and Ethereum would bounce back. Those were the two most well-known, the two most well-regarded, and even if all the other ones tanked and never came back, those two would. Then I set up a dollar cost averaging of $15 a day, which is $450 a month. Dollar cost averaging is just when you invest into something on a periodic basis and you're just buying in at various points, right? So if you have a monthly investment or a weekly investment in something, that's what's called dollar cost averaging. So what happened was I was buying every day when it was cheap, really cheap. And I just stopped looking at the account. Today, that account is over $70,000. The lesson here is patience and strategy. So right now, to be honest, I feel pretty nervous about where the stock market is. You know, we're at all-time highs and we're going into an election year. I do still have money in the stock market and I'm still dollar cost averaging into it with various investments. But I also have a good chunk of money in money market accounts earning a boring 5% just in case we have a big dip. And then I'll have some money on the side to go in and buy the dip. It definitely helps to increase your income so that you can have more money to invest. So in this video, I talk about how to turn your annual income into your monthly income. And I don't usually make videos like this, so if you enjoyed it and want to see more like it, let me know. Remember to subscribe below. Peace.